Hello and welcome into the KE Report. Chad and Corey here, getting an update from Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, it's always great to get you on the show just to get an update on how you're looking at the macro markets, the general equities, the commodities. And it was also great seeing you in New Orleans at the investment conference there just 2 weeks ago in the flesh and just sharing some ideas and war stories together. So nice to see you in person. But as we get together here at the beginning of December, we were noting that the general markets have just been on a tear higher, really ever since the election. And it's curious that all of the good parts that they want to see, the deregulation, the lower taxes, are being factored in and maybe priced in. But I wonder what's going to happen the beginning of the year when the Trump administration takes office and when the gravity sets in that there's going to be things like tariffs or inflation or possibly some other challenges to the plan that's been laid out. How are you looking at where the general equities are positioned today and also looking forward into the beginning of next year when we actually see these policies put in action?
Yeah, well, I should start by saying that I've been completely bullish lately and I've been writing these trends, so I'm not complaining. Not complaining at all about what's been going on with the markets. It's actually bumped up our portfolios quite a bit. But you're right. I mean, people are looking at the tax cuts coming and the lower regulation and like stuff like that, and they're all juiced up about that, but they aren't seeming to price in some of the downsides, which is we are going to see, or probably will see, an attempt to cut the government budget on a broad scale. And the reason that's a problem is there are many parts of our economy that actually depend on some kind of, funding from the government, either a lot or a little. And also the tariffs. I mean, Trump says he's ready to start that on day one. I was watching Schwab TV. I go back and forth between that and Bloomberg, depending on which one actually looks interesting to have on in the background while I work. And these guys on Schwab TV were saying that Trump's proposed tariffs are a negotiating position, and most of Wall Street agrees with them. I just put a chart out on Twitter and Blue Sky about that today, where Wall Street really doesn't think there's going to be that much, even though Trump has said that he is going to put big tariffs of like 40% on China, tariffs of 25% on Canada and Mexico, unless they meet certain requirements, and between 5 to 10% everywhere else. And I guess people think that's just a negotiating point, but we also know that he was not giving Charles Lighthouser, or is it Lighthouser, whatever his name is, a cabinet position because he's not like active enough, not like strong enough. And I think Trump really wants action on the tariffs. We'll have to see how it goes. I mean, there are things he can do without Congress and things he has to do with Congress. But if he takes action on like a lot of the things he wants to do without Congress, that could be a shock to the system. Now, that doesn't mean a recession necessarily or anything like that. But considering the way that the markets have been stretched so high on all this good news, good news that has helped my portfolio along with everyone else's. So again, I'm not complaining about that. It's not hard to imagine that a setback or lowered expectations could really knock stocks down a peg, at least for a while. And so if I was going to have to say when that would happen, I would say after the inauguration, when some policies start to get enacted, that's when we could start to see some of that. And again, we shouldn't mix what goes on with the stock market too much with what happens with the economy, with rates certainly, but the economy is doing fine. We just got new job openings numbers. They were fantastic. There's plenty of stuff that's good about the economy. Inflation is still a problem though, and still underlying things, and prices are still too high for a lot of people and a whole bunch of stuff. And we'll see how that can be addressed too. If there's disappointment with how we deal with inflation, that might be another thing that could send stocks skidding lower. So I guess what I'm saying is that things seem to be unbalanced now in favor of the upside, where everyone just looks at good news. After the inauguration, we might start to see more balance in the market, where like people start to consider the bad things as well.
Yeah, I hear you, Sean. I've been saying that this market right now is just really trading on euphoria. All the people that are excited that Trump's coming into office, well, he can't disappoint them because he's not in office yet. So these markets continue to trend higher. But if you do see maybe some disappointment come in, maybe a little bit more weakness in markets, does it hit everything? Is overall kind of all these markets, have they all just benefited from this euphoria stage and everything could correct?
Well, one place where I'm seeing more euphoria than just about anywhere else is in the US dollar. And so I think that's going to correct come January. And as the dollar goes down, usually, not always, gold goes up. And so that's one place that I'm looking for as like a safe harbor, if like things do start to get rocky, is I expect precious metals could look pretty good because everybody around the world has reason to buy precious metals right now. I mean, we're having martial law in Korea, the problems in the Middle East. I mean, they're just having a rampaging war in Syria right now. There's a lot of stuff going on around the world that really bolsters the case for gold. And again, I think the dollar got kind of euphoric. It hit like a 2-year high, didn't it? So it has come back from that peak a bit, but I think it could go lower starting in the first quarter of next year. And I think that'll boost gold there.
Well, and just tying it into the dollar and gold, Trump literally came out this last week and tweeted about the BRICS countries and made a proclamation slash warning to them that if they think they're going to bypass trading in the US dollar to trade amongst themselves in their own currencies, which is exactly what they're doing, that he's going to stop trading with them. So there's a lot of this negotiation and posturing. And a lot of people saw this post of him going directly after the BRICS countries and saying, if you want to keep trading with us, you're going to have to use the dollar as a boon to gold, because if those other countries do want to break away from some of that trade and trade amongst themselves in their own currencies, maybe they would start stockpiling gold. What do you make of that whole, I guess it's part posturing and part reality with currencies and gold, and how the BRICS in the US will be able to find some kind of common ground?
Yeah, I don't know about threatening other countries about, using other currencies than the dollar. That seems kind of counterproductive to me. For one thing, I think, at least up until this point, them using currencies other than the dollar is more of kind of an empty threat. I mean, because one reason they use the dollar is there's so many dollars around. It's much easier to trade in and out of. And so when you're in Russia and you're trying to buy stuff from, say, Africa, it's often easier just to change your currency into dollars and then, use it to actually buy the stuff from Africa and stuff like that. I wouldn't seek a currency war with anybody right now. I mean, especially as dependent as we are on the rest of the world to fund us. That doesn't seem like a smart thing to do. I'm not the person running this. And again, this just raises the point. There's a lot of uncertainties that the market doesn't seem to be pricing in right now. Things may go well, they may not. And once that uncertainty starts to be priced in, then I think that'll make gold look more attractive. I don't know if other countries would buy more gold to back up their currencies. I'm not actually sure how they would do alternate currencies. I mean, wouldn't it be easier to do like some kind of group currency against a basket of commodities that include oil, but also things like gold? I don't know. I mean, it all depends on how they really want to do it. And I'd hate to make any speculation on that because I'm not actually a currency expert.
Yeah, let's stay away from that because boy, oh boy, we hear a lot of people saying just how the dollar, death of the dollar is coming and all these different groups of currencies. Who knows how it's all going to play out? But Sean, in that environment where potentially gold does a bit better, but stocks broadly, markets are showing some weakness. How does that correlate over to the precious metal stocks? Because today's another great example of the larger, well-known stocks doing well and the juniors continuing to lag.
Well, my juniors are up. I guess we look at it that way. And in fact, one thing I did today was I sent my resource trader subscribers a video that I filmed with a CEO in New Orleans, and I recommend the stock because it just looks so damn good. I hope they get into it. We'll see how it goes. But yes, some juniors are not really doing that well. And in fact, gold miners as a group, seem to be underperforming gold a little bit lately, which kind of worries me. But then I was doing some analysis of gold itself. It's coiling up. I think what we're seeing with the miners is people just get sick of seeing gold miners sit there and they go to playing other things. I mean, I can tell you about some of my other stocks like AppLovin or Hims and Hers. They are just rocketing. And I think for many investors, they just get bored and tired of watching gold and of like watching gold coil up and like gold miners really not doing much. Also, there has been a problem with some underperformance in some juniors where they're either they missed production targets or their earnings were a bit weak and like stuff like that. So you're asking people to invest in those. Whereas on the other hand, these tech companies seem to create money out of thin air, you know. So you can see why gold miners are not looking that good, but I still think we are going to have a very strong rally, not only in the metals, but in the miners, especially silver miners, even though those have been some of the ones that have been performed the worst lately because of disappointing results. But I think that they will do very well in the next quarter. They're really kind of set up for it, you know? I mean, we don't need much of a move higher in gold and silver to again make analysts start to re-rate these miners as long as they're miners. I know you guys and I, we always have this discussion about what kind of stocks I like. I like stocks that actually produce, that aren't just exploring, stuff like that. I mean, there are great exploration stocks out there, and like some of them trade so damn cheap when you look at a company like Banyan Gold. I had a nice talk with them too. You know, I mean, it's a great company, it's an explorer. My wife bought some. I'm not buying some right now because, you know, they could go along for a while before someone scoops them up. They look like a buy, but that doesn't mean anybody has to buy them. That's the problem with the whole junior space is they look so darn cheap, but they can get cheaper, you know? So that can be a problem for like some people. But I think at least on the production side, we are going to see some real activity in the next quarter. And that's kind of how I am actually trying to move people in the publications I run right now.
Well, Sean, it is true that it's nice to see the producing assets, the producing companies making money, not just in gold and silver, and getting a little bit more traction, but we're seeing that with oil stocks. We're seeing that even in the copper space. It's the producing stocks that have gotten the love from generalist investors or even resource investors, while the pre-revenue companies have continued to struggle. But to your point, maybe next year we start seeing a little bit more of a rising tide lifting even the juniors. But one sector that we can say has had a pretty good year, really a pretty good couple of years, is the uranium sector. A lot of macro tailwinds at the back of nuclear power from commitments to triple uranium production in over 20 countries that came out of this year's COP conference. There is tech companies like Microsoft, Google, Oracle, Amazon, all committing to small modular reactors. We've seen small modular reactor stocks like NuScale Power, Nano Nuclear, and Okla just surging higher. And we've seen some of the uranium stocks get a nice bid. How are you looking at things now, though, as we round out the year after already having made some big moves? Are we getting a little long in the tooth in some of these, or is there still more room to run?
No, I think there's more room to run. All of my uranium stocks are positive, which generally makes you feel nicer about the group as a whole. And I think that I could be putting more money to work there as well. Um, Again, I tend to favor stocks that are either producing or on the path to production. And so that's how I will kind of do things. The pure explorers, I'm not really so big on them. I think those are two different kind of animals because gold miners may have a long time frame, you know. I mean, there's a lot you have to go through, but uranium miners is even longer. I mean, there's all this environmental stuff and like other things that you have to get done. So I would much rather go into a producing uranium company. That's all I'm saying. And I think they have plenty more upside. And I kind of see some excitement building among the people who actually work in these companies and just investors. We're starting to see some people really noticing how good things are there and how things could be. And so I think uranium stocks as a whole, uranium producers, I should say, are going to have a great 2025.
So, Sean, there aren't too many uranium producers out there when you compare how many explorers there are. And in all fairness, look, this sector has finally come back into the limelight here in a good way because it was left for dead for quite a while. What about the actual nuclear stocks, like these small modular reactors, like any of the actual generators of this power? Do you dive into those or do you just stick to the underlying uranium stocks?
Well, the time to really dive into the small modular stocks was a while ago, right? I mean, they've all had great runs, very nice runs. I think, and in fact, Chad and I were having a little chat about this. I think that they could see a pullback here. Doesn't mean that the run is over, but they could pull back. Those are risky. I just think they have more upside. I want to pull back first. And if people want to do something that just encompasses the whole thing, they could pick up like an ETF, like say NLR, that takes the whole uranium business from teeth to tail. Everything from the miners to the utilities that actually use uranium and like stuff like that. You don't have to get too risky, but if you have appetite for risk, then you should probably be looking at the explorers. They're not right for me, but that might be right for like some people, and there could be some real potential there. I don't know what the next catalyst will be. We have seen some impressive catalysts. First of all, we saw the U.S. government put down a timeline for weaning us off of Russian nuclear fuel. Then we saw Russia retaliate with its own ban, saying, well, we aren't going to ship stuff to you guys anymore. And in fact, there seems to be a bifurcation of the global uranium market where there's an east and west things now. More and more, Kazakhstan is actually signing contracts to ship its uranium to China, which means that, there could be some Western uranium users that might be counting on Kazakhstan, but maybe they shouldn't be. We'll have to see how that develops down the road. But there's some definite things that could push it around that are not only fundamental, but also geopolitical. And so that means that we could have some explosive price movements when it finally comes to it.
Well, Sean, just to that point, we've seen because of the Russian ban on exporting enriched uranium fuel to the U.S. and the U.S. banning Russian exports, so it's a kind of a tit for tat situation. We've seen the company Centrus Energy, LEU is the ticker. They're one of the only domestic enrichers of uranium fuel that actually can provide this to utility companies. And we've seen some of the utility companies are actually running, and some of those utility companies don't just have nuclear, but they may have access to solar and wind and hydro and different areas. Are you attracted at all by playing the enrichment side or the utility companies themselves, the ones selling the electricity to the customers?
Oh, I definitely like utilities because the demand for electricity in this country and pretty much the Western world is just going through the roof. And it's not only due to AI, though AI is part of it, it's just because of the electrification of everything, So I like utilities. Now, LEU, I don't know the specifics, but don't they get the fuel they enrich from Russia? So isn't this ban kind of going to hurt them or no?
Well, I believe that they actually can still source it from domestic sources or even from French sources, and even from Cameco's, even in their JV with Kazatomprom. So I think they can get it from multiple places, but they're one of the only enrichers outside of Russia. So the stock has gone from $30, it shot up to 110, and now it's pulled back to, $80, $90. It's just interesting that there's a focus on where is this energy going to come from? Because uranium is one thing, but then you got to turn it to UF6 and then enriched uranium fuel. And Centrus is the only company I'm aware of that does that in the West. But then you have all those utility companies that are also the ones buying the enriched uranium fuel to put in their nuclear reactors. So, a lot of them pay a dividend and some of them are more stable. I just wondered what your thoughts were on, especially the utilities.
Yeah, I have nothing against them. And I do want to raise one point on that, which is I believe that when Cameco picked up that Westinghouse a division that builds nuclear reactors, one part of that enriches uranium in Britain, or it used to. So it could again. And so maybe that's something that could come into play. We own Cameco anyway. I think anyone in the uranium business should own Cameco. It's kind of the benchmark. But even a state company like Cameco could have some upside surprises for us if they start to do that. Or if the Westinghouse division they picked up in Britain starts to enrich uranium again. So yeah, that was one reason that I mentioned NLR, the ETF, is I think people should be looking all along the value chain on uranium. I just think there's a lot of potential out there.
All right. Well, I think we'll wrap it up there, but that's a good suggestion on the ETF NLR because there are other companies in there that build reactors. There are other utility companies in there, as well as some of the bigger producers in uranium themselves. So it's a nice mix. It's a good way to get exposure to the space. And Sean, always great getting you on to just talk about all these different factors, the macroeconomics, the domestic political situation in the U.S., the geopolitical situation overseas, what you're seeing in U.S. equities, what you're seeing in the precious metal sector, and then also what's happening in the nuclear power sector. So definitely want to keep following along with you. We'll check in with you again in a couple of weeks. For those listening in, if you want to follow along with Sean's work, definitely click on the link below this interview. It takes you over to Weiss Ratings Daily, where you can look at publications like Wealth Megatrends, Super Cycle Investor, and Resource Trader, and definitely hope you check out some of Sean's offerings. Sean, as always, looking forward to our next conversation.
Okay, thanks a lot, guys.